Placing support and resistance areas is one of the most useful techniques a trader can know. You may have heard about support and resistance before because a lot of traders use it, and there's a lot of forms of support and resistance out there. But sadly, most traders do not use true support and resistance. They use things like pivot points, Fibonacci, Gann levels, etc. But there is a problem with those forms of support and resistance. They use mathematical formulas to divide a chart up into sections, and they pretty much guess where support and resistance is. So those areas have very little to do with actual price movements, very little to do with price action, and very little to do with the reality of trading. I prefer to base my support and resistance areas on actual price action. So let me introduce you to how I do support and resistance. First, let's go over some of the basic terms we'll be using when we talk about support and resistance on the forum or in webinars. Support equals a buy area or a bull area. So terms like buy area, bull area, support area are interchangeable. If I say something like there's a lot of buyers in this area, I'm probably talking about support. Resistance equals a sell area or a bear area. So the terms sell area, bear area, and resistance area are interchangeable. If I say something like there's a lot of sellers here, I'm talking about resistance. If I say bears are grouped up here, I'm talking about resistance. Because a support area is a buy area and a resistance area is a sell area, support always appears below the current price level and resistance always appears above the current price level. On this chart, price is currently here. So this area that appears above is resistance, otherwise known as a bear area or a sell area. And this area that appears below is support, otherwise known as a bull area or a buy area. But what are these areas and what do they do? Support and resistance areas are barriers which block price movement. This resistance area blocks price from moving up. It won't block price 100% of the time, but it has a strong chance of blocking price. When price is in a bullish trend, we get higher highs and higher lows, and you know what that means. It means that price keeps going up and up and up. Then it hits this resistance area. And what happens? Well, in this case, price stalls and reverses because a resistance area is a sell area. It's an area in which sellers are grouped or bears. So when price hits that area, it has a high chance of reversing. Buyers and sellers group in certain areas for many reasons. Option contracts, psychological levels, previous spikes by economic releases. The reasons do not really matter. What matters is that they are grouped in those areas and those areas do act as barriers. By identifying and placing resistance areas, you're learning to read the market's mind. And I know this sounds a little cheesy, but it's true. Support and resistance allows you to predict with a high degree of accuracy what price will do next. How? So if price is here and there are a lot of buyers at all these levels below it, you know that when price falls to these levels, there is a strong chance that they will react to the buyers. This reaction could be a sharp turnaround, or price could just stall there for some time. And if price starts to head up to these levels above, these levels full of sellers, these resistance areas, there is a strong chance that price will react to the sellers up here and that it either reverses down or stalls. Knowing how to place and use support and resistance areas gives you a massive edge in your trading. Just think about how powerful it is to know where price is likely going to reverse or stall. It would allow you to do things like enter reversal trades, spot continuations in a trend so you can enter continuations, or hold a trade longer. Know when not to enter a trade, which is also very important. For example, going long 10 pips before a major resistance area is a pretty bad idea. Since resistance is an area full of sellers, why would you buy 10 pips before price is about to hit an area full of sellers? Not a good idea. Support and resistance allows you to know when to exit a trade or tighten your stop loss. If you're short and price is about to hit support, it may be time to close out or at the very least tighten your stop loss because you know price is about to hit an area full of buyers. So why would you want to still be short at that time? You want to protect yourself, so you might tighten your stop loss or you might just get out of the trade completely. And beyond all of that, support and resistance allows you to do a whole lot more. And you're going to learn these things as you trade using support resistance and also as you go through the rest of this course. So now let's look at some of the basic rules for placing support and resistance and actually place some in the next video.